You know, there are Buffalo earnings reports, and then there's Netflix, surprising everyone with other numbers that a lot of folks tend to look at differently when it comes to technology giants. Not just whether their earnings meet or their revenues meet, but things like how much of a product they're selling, or in the case of Netflix, how many subscribers they're adding. And suffice it to say, Netflix blew all that away, and the stock up appreciably in a market that's been relatively soft. Let's go to Charlie Gasparino and Deirdre Bolton. Charlie, you have more news on this.
Well, I mean, I know it's a good day for Netflix, but I'm going to give you the bear case on this, which is increasingly what I'm hearing from traders and investors. And it's simply this, is that when you really pare down the numbers, Netflix has likely hit a ceiling on the number of subscribers. They have 45% penetration rate in the U.S. How much more that's going to go is really a question mark, given competition from others, Amazon and possibly more, as the media landscape changes. And here's some stuff to kind of look at when you bear down and really look at the numbers. Cash flow at Netflix continues to decline. They financed a lot of their expansion with debt, and yes, investors keep pouring money into this. But there is no sign that this company is going to be profitable. I know you can give us the Amazon take on this, but, how many Amazons are there out there? And one other thing, Neil, one of the reasons why the Fed is increasing interest rates is to get rid of asset bubbles. One of the potential asset bubbles out there are companies like Netflix. So this is just something that investors, as the rosy scenario gets pumped out by the media, investors should just keep aware. I'm not saying, sell. I'm just saying consider this side of the story. Back to you.
You know, it is interesting, Deirdre, when we look at a Netflix, it's much like Apple, right? A lot of people say it's not just whether they meet their numbers, but how many iPhones and iPads they sold, what's the momentum for the iWatch and all of that. So we have a different sort of a beast here. IBM was the same way. Their earnings beat, the revenues did not. And then there's the guidance issue. One reason why that stock, IBM, is going the other way. We treat this group differently, don't we?
Well, we do treat it differently, and I think the stocks that stand out on the upside are the ones that really are, people consider unique propositions. And so Charlie, of course, talking about that with Netflix, and a lot of people do think that. I know that Netflix is burning cash at a record rate, like negative net interest is something like $860 million, and if you look at the stock, investors love it anyway. With IBM, quite frankly, we just expected more, right? This was the first quarter, I think for 3 quarters, they had actually exceeded targets as far as revenue growth goes. And so this one as a miss is felt even that much more, because there were a lot of people saying, like, okay, they are diversifying, they are getting more into cloud, they are getting more into even the beginnings of AI in certain areas, and that's all positive. So the fact that after 3 consecutive quarters of revenue growth, there was a miss, I think that's why the stock is being punished, particularly today. It's taking about 50 points off the Dow. So I do think that Netflix, at least as far as people I talk to, is still considered a unique proposition, much as Amazon is. But it is true that they are blowing through cash at a record pace, Neil.
And, we're all in an environment, guys, and I think, the president himself mentioned it in his multiple interviews here, that interest rates are going up. He doesn't like the fact that they're going up.
He doesn't like it. Yeah.
But that will change the math on a lot of these companies, right? Charlie, how big an issue is that?
Well, I think for Netflix, it's definitely an issue if you start looking at the balance sheet. I mean, it borrows heavily to finance expansion. It is not making money. It is, when you put those two things together, you wonder just, how does that, how long do investors give this company that much leeway to borrow as much as it does, to burn through that much cash, and to not make money? And you got to look also at what Netflix is. I speak to a lot of people out in L.A. because I have friends of mine who are in the movie business. Netflix is a full employment agency for Hollywood, for every B-rated movie producer, right? That said, how much of its content is really consumed? A lot of it's not. So at some point, reality will meet up with expectation. Amazon delivered, I think it's fair to say, on reality for the most part. And that's why it's a great company and a great stock. Netflix is going to have to deliver on reality, and they're not there yet. And they're going to have to deliver it in a rising interest rate environment, which no matter how much I think Powell is intent on raising rates more and unwinding the balance sheet, because he knows that the problem with not doing it is that you create asset bubbles, like maybe what you have with Netflix.
All right, but there have been a lot of, Deirdre, you finally, doubters all the way up, right?
Certainly, I think, you can make a bull case, you can make a bear case for that particular stock, as you can with anything. I'm actually very interested, we're a couple minutes away from those Fed minutes, which we'll see at least a little bit more in talking about asset bubbles, what the Fed was thinking right back in September. And I will tell you, as much as IBM is weighing down the Dow, financials are really supporting it. There is a push and pull feeling that obviously we've been covering all day, where you have actually Goldman Sachs and some of the other financials lifting. We're going to see if that changes in about 20 minutes, Neil.
That's on higher interest rates, I would assume.
All right, guys, thank you very, very much.